Okay, I'm at that. Somebody asked me about Ward 3, and I thought that was interesting because I guess it's a institution, so there's wards in it, and it's institutional order flow trading. You got the ICT in here. You got everything in here. You got a 7-period EMA. You got a smooth, 21 on close. They're all on close. And you got the classic. Now, no chart goes without the 200 MA. And we have the 9-period MA. I think that's the RSI. No, I don't know what that is. Does he have a 9-period on there? No, I see it listed, though. So, yeah, we've got the usual trappings of a killer trading system. And it wouldn't be so bad if the guy was calling out the trades on here, but I've watched at least an hour of this guy's stuff, and he doesn't trade. There's no trades being done. There's just vague speaking of how he gets in. No mention of what style of order it is. He does use the word pending, though, but we don't know if it's a stop or a limit. And we just, this is knee deep. There's got to be 20,000 people like this teaching Forex trading like this. And really missing the whole RSI thing. Is just an amazing tool, but with the candles there, you just can't make out the RSI. That's the only problem. You really destroyed it with the candles. Because it is totally built on close. I'm sorry, but this is built on close. So that's a big problem. And so look at his, you can see the signals even on the 7-period. So what you're looking for is in a downtrend. If you think that this isn't a downtrend from even here, you need to buy anything that is more overbought than this. And it's below that. So what is below that? This is below it, but it's more overbought. Now it's very dramatic on the 7-period. You can also take it over here. It says triple negative reversal. And the projection is supposed to be, and this is a real long-legged one. So it's like, wow. This is, plus it's up against the, okay. You can't make the argument that this is becoming this, which he's about to put in lines like this. This doesn't matter anymore. I don't think it matters anymore. After it raids this top, all the way to here, and that's the pound Australian. Wow. Look at that. And once again, more sell signals from RSI. More overbought, lower price. These are very long-legged ones. And they're not as dynamic as the quick and dirty ones like this. So if you're inside of 5-period, 2 to 5-period reversals, you can't have a 1-period reversal because 0 is here. So if this is 0, it's going to be 1, 2, 3, 4, 5. It's a 5-period reversal. And this has got more punch to it because this is the consolidation back to the triangle when the rotation point. Anybody that's bought this in anticipation of seeing this price, and even the robots that are coming in with trailing sell stops, I mean, he's got so much data on the screen you could die. They're getting triggered, and so you have this sell, and you're supposed to take this add it to the low, and that's your projection. And you hit that price. Actually blew out that price. And you hit it almost in the price pulse. This is what all these people are looking for on this Gartley shit is. They're looking for an echoed image. They're looking for this price pulse to go like this, to go like this. Now, this missed its time target if you were going to do that. Also, if you can see, here's your 2-period reversal, and there's reversal, reversal, reversal. The more oversold it gets, then the turning point. RSI is here. Anything above that, you're never going to get it to pull down. It's not like you're looking for a 618. You're looking for, and maybe this is your 50% pullback. When this thing starts to come beneath here, you need to just start buying it. You can't, in other words, as soon as this gets above here, sell. Now here's where it gets dicey because you're coming near the end and it's going to take quite a bit of time. We see our first divergence here and we're getting a compression divergence. So we're getting all of that and then one final crush. And in my mind, that's the first kind of buy reversal because you're more oversold at a almost higher price. You really don't get, in other words, because of this monthly, if this is a 2-week chart and you could slice this wave one more slice. In other words, if you could also make this into a 2-month chart, you'd see a nice clean reversal here. And you say, wow, look at that. It even kisses this. Now, you can sell at these moving averages, but look at the heat you're taking if you're not aware of this supply, whatever you want to call it. And to me, it's like this. Market can't see this anymore. They don't matter. I don't think this matters. And after this, none of this matters. In fact, to put your lines back here and carrying forward is utterly retarded. It doesn't matter. It's not what's causing the market to move right now. That is hindsight. That really is a waste, and he's going to do that. I just noticed that this is what you can do, but it's lazy. It is calling out the price. It's better to just come in here and go, all right, we see the scalpers are having fun here. The next scalp, dead cat bounce zone, should be about right here. We should see some drama. And then if we can ever make it down here, it'd be like, wow, I hope I got enough. I hope I made enough money. And this is a monthly chart, mind you. I mean, what is this guy kidding? What kind of fucking trade is he getting into that he needs to look back to 2000? I mean, you really have to be, you just, none of this shit matters. Like, all that matters is this right now. How would this fucking even matter? Are you kidding me? You just really got to think about this shit, man. You can't just get lost in these fucking indicators. Yeah, I could cherry pick. I show you all the amazing, but what's the trade now? Okay, now are we more oversold at a higher price than this? Yeah. But it doesn't mean that it's going to go like this. There's going to be all sorts of bullshit in here. You got to figure out which time frame you're going to be on. There was never divergence to even get this cell going. There probably was on the 3. So if you go, if you take and put a 3-period RSI, a 5, 7, a 9 on the bottom of your chart, you'll be able to see the people that are, here's a reversal, right? Here's a reversal. Here's a sell, sell, sell. And then finally it's over. There's people that are getting in on the signal between your signal. Like this could have, if you had a 2-period RSI, you probably got more over bought here and a lower price than here. And if you add that to the lowest close within those, right, it's taking you to here. I mean, the velocity of this, but it's an index. So what it's doing is it's giving an objective view of the price tugging around. Still a decent move here. Then you get the divergence, and you'll typically get divergence, and then you'll get the so here's your last reversal that worked, kinda, and here's your divergence, but not exactly. But you are getting a lack of dynamics here. You're just getting a flag or whatever you call it. Plus, if you look at the big structure here, which I just can't imagine that anybody's holding a trade for 5 months, trading so-called order blocks. I just don't get it. And how big are you in this trade? And I guess you're doing it. I don't know. This guy's doing it apparently. I don't know what's going on here. The monthly chart is good to prove to yourself that the markets can move a lot in 1 month and not a lot in 1 month. And look at this and just say, holy shit, look at this month. Look at these 2 months. And just be like, what the fuck? How am I going to trade these? I'm just used to trading this shit. And then how are you going to all of a sudden, shit, we were so long on this thing and then they just blew up the account. Really? You were just in one ticket. Yeah, one ticket. One trade. I'll go back to this guy's discussion here.
All you would do is take a horizontal line.
All you would do. So.
And you just simply plot it to the tip of that wick. And that's going to be your first key level, or your first area where the market seems to struggle. How I made that is I looked at this spot right here.
It struggles, but the fact that it queues up here is academic at this point for trading this into the future real time.
This is a breakthrough. Here the market struggled, it broke through. Here's a test at that same level. Over here, here's the breakthrough. Here's where the market struggled. Here's a breakthrough, and here's a test at that same level before it continued. So that is a nice strong level that you want to have. Now all you do from there is you can double click on, actually, cancel.
Okay, why that's a ridiculous comment? Because can you find any other key levels in here? Look at this one. Look at this top bottom. Look at this structure. It comes back to here. So once you drill down, you see, top becomes a bottom, blows out, comes smashing into this rooftop ledge. Here is your jigsaw. Right? As soon as it starts to invade that, and then you get your doji, you can safely get in here with a lower risk because the market's quite down. Safely get in here on the long side. Even the dumbass moving average agrees with that trade. Laggy fucking, and you've got reversals. So if you really wanted to get your ratios better, the market's going to allow you to trade certain times. So you're not allowed to. A problem with trading is you have to wait for a triangle on the wicks where the thing comes to this. You waited like 6 months for that, right? This is a monthly chart. And plus you were trapped underneath the floor here just from an auction standpoint. And this does matter because this is uncharted water. Once it's been charted, it's meaningless. So this is the hole to fill. And this is, and then you would start to trail on the tops. There could be a huge battle here that just goes on for nonsense, Phil. I mean, you can only imagine all the scenarios that could take place here. I mean, your fantasy bull dream is that comes down here, get a hammer, comes up. You've already got your trend line drawn here, and you're like, oh yeah, I've seen this before. Maybe a little rejection of the trend line. And then we're just going to start cutting along, and then it's just a matter of time before we hunt down this shit, right? I mean, this would be it, right? This is your dream scenario. It's like, okay, yeah, move my stop to here, Goes back and move my stop to. I mean, this is perfect world thinking, right? Stop, utopian. Just move my, oh yeah, look at that, fucking great. Let's do another one of those trades. Okay, let's do it here. Get in, riding it up. All of a sudden, holy shit! Jeez, I didn't. And look at the absolute dead. Just nobody gives a fuck about this thing anymore. It's just abandoned down here. Oh, poor thing. Last of the cells. Yeah, you can't do a yearly chart, MetaTrader. But yeah, all these are key levels, but this guy's on the monthly chart. This is the drill up, drill down time frame. But you had to ask yourself, do you see yourself riding this thing? And yeah, around 2020, I'll be getting out of this trade. Dude, if you're scalping, I don't think that you'd be able to hang. If you just made how much money just here on the 1 hour chart, and it's almost safe, you know, it's funny because when a market's like this and you're looking at the monthly, you're like, God damn, when's this thing gonna? But if you're on the hourly during this phase, you're thinking, Jesus, I'm getting killed. I mean, it looks like this on the hourly. Anyways, time frame shifting is. So some guy made a comment, and he said, "What's the best time frame to use this system?" I'm like, well, probably the 5-minute chart with this big laggy moving average. How about the 1-minute chart? Of course, you could put a 14-period RSI in here in the classic. I just think it's ridiculous. The guy that showed me how to do it uses a 14, and because he's real slow, he's from down south, and so I said, well, 3, and then I saw a guy do 2, and I go, okay, 2, I could do 2. And if you do a 2-period RSI, I think you are a swing trader. Of course, it gives you great entries as far as these reversals. If I put this on a 2, you just see RSI would be pegged.
Click on it one time, and you can actually.
It would be pegged on top of this. It just looks like this. 2-period RSI. You really should. I should switch it to 2. I got it on 3. I'm going to go to the 3. But 2? Wow. That's very. There's almost. I would say at 1, it's a problem, right? At 1, there's no index to the index. But at 2, right? It's like having a car where it's idle or full throttle. You have nothing in between. So you have to do brake torque so you don't kill people. But yeah, 3 at least you've got like a 3-speed or a 2-speed gearbox. Right, you just have first and second, overdrive and first gear on a 2-period RSI. You just have a 3. I mean, 3, 4, I guess, but why bother? It's like you could say you're using the Taylor method, which is the 3-day swing method. It's so funny, and they have this thing in here called the Lucent or something. like everybody's got to have something. Like we have the Rainco, we have the Hakanashi, but well, I'm a cloud trader. I'm using the Tankin line as my decision point. I mean, you just got to fall over laughing when you see people's reason to pull the trigger. They've come up with some harebrained system of moving averages and Fibonacci, and you're like, yeah, but the market don't see no Fibonacci. And these guys keep talking about the institutions and what they're doing. And well, let me see if I get this right. They're the only ones that can move the market, and none of them, they're all doing the same thing. So by that, by that logic, the market should stand still because all the big money is all the smart money. So smart money against smart money, and they're all like sitting there going, "Okay, so I'm in the same trade as you. Can we go home now?" I mean, are you kidding me? Um, the smart money, but now I guess, and of course, the only reason they say that is because of all the dumbass fucking trading courses like this one, which is this is like I said, the RSI you can use it. I wouldn't use it at the moving averages, and you could use it just like on the line chart. So if you put up a line chart, you'd say, look at on that line chart, it makes total sense. You just do a line chart on top of a bar chart. Okay, so here's what I did. I put a line chart. Oh, that's my bracketed one. I put the line chart. I mean a bar chart, and I just switched to line chart. So this is the monthly gold, and I could put in his 7 period. His 7 period looks like this. I should put that Ranko up there. It's pretty fucking hysterical. I have people coming up with these mouse traps. Yeah, I can't seem to. I got a mouse in my house. I offered to the guy at the coffee shop who built some kind of cancer zapper for him to test it out on my Mies. All right, so here we go. 7 period on the bottom. 3 period on the top, actually. I like the 3 period on the bottom, but the problem with the 7 period is that you have to stretch it to get the same patterns as the 3 period. And the 3 period has a better divergence profile and reversal profile for being blatant about the divergence. So here you have the nice clean, this is kind of your last reversal in a way here, more oversold. And then you get the right on the, you just have, and then the monthly gold market here, you'd have to just go, okay, we're selling. We're just selling. That's all there is to it. Here's the more oversold at a higher price. And here you don't really get that, see? So if you want to push the edge of RSI, I think that's how you do it. So you're not getting, actually that's a reversal that's so far out in space, it's not even, I mean, this typically is your divergence, which it is. And then you get a reversal here, and then you go long. But that's such a great buy. Plus, it's trapped below here. And this, you don't get it. You still get the divergence, but you don't get the reversals. Here you get a nice sell, and here you don't. So in the 7 period, you just don't get the dynamic attributes of RSI, what it's really good at. See, this is a classic sell that you had a real reason to take this trade. Anytime the market gives above here or here, you've got sell limits in, and there's a, I don't know if it's still there, Visual Trader in the United States. Some people, it's got where you can place orders right here on RSI. But it's a CPU hog. But see this price and this price, or you could do it where you take this against this RSI. So this RSI is more overbought than this one. This one's trend. You could use this as a trending one. You could say, well, the guy I studied from, he's putting a moving average on this, which I think is just too much. I just want something quick and dirty, and I know that's a bad thing, but see, the divergence works out good, but the reversals don't come in as often. We have the same divergence here on a 3 and a 7. And we still get the sells just like we did. In fact, this sells almost better than this one because of the 3. So it's sell, 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 sell. And this one is still a good sell, right? Because it still qualifies as more overbought at a lower price. And now we're coming into the situation where it is more oversold at a higher price. But this is a little suspicious because it's really starting to melt down here. And another thing is that you have to be suspicious of very long-legged signals. This is a good one because it's tight. I think that's only going to be... So that's just, if you're going to count a 5-period reversal, which is what Cardwell's doing. So that's 0. And you have 1, 2, 3, 4. It's a 4-period reversal. So that's good. And then these are kind of long. So you have 0, 1, 2, 3, 4, 5. So this is 5. This is probably a 5. But then this is all zigzaggy stuff. And if you go to since we're on the monthly, you have to go to the weekly and see that there's more trades. RSI keeps you from over trading if you only take these really amazing signals. Forget the moving averages. You're just going to filter out good trades, that's all. I mean, it's ridiculous. At some point, you just got to fucking... You can't smooth this shit out till you only get a couple trades. It's ridiculous. Maybe if you're going to have 20 pairs in there and something's going to bite, on your dumbass moving average, something's going to bite. On the time frame you're on, too. So if you go to the weekly and... So on the weekly, I'm going to scrunch in just a little bit. Turn on the closing prices. Okay, so this is very different situation. Here, the RSI is at like 0. Right, it's like 2.3. Whereas here, it's only 9. So the 3 really gets crushed to the floor here. So I don't see, let's see what's going on right now. I guess the last divergence. Pretty tough to see there. Okay, I see a sell just before this. Now this is a nice tight. If that's 0, that's 1, 2 period, then a 0, 1, 2. 2-period reversal. Top become a bottom. And that's your entry right there. So what you would do is mark off. So we're going to forget about the 7 because we can't see the signals. What you'd be doing is you would mark this top, and you're looking for the market to push RSI more overbought. Meanwhile, stay below this price. So you can put your stop there. But since we're on a closing prices, which is why people get killed trading RSI, is they have only one ticket and they're not accommodating the wick factors. So we have to go to see what the wicks are doing here. So I really should put the moving average at this point on top. And this is the only way to really reveal, in my opinion, what RSI is referencing. So we go to our trusty trend, and we look for a moving average, and it could be simple or exponential. And I'm going to put white on there. And I guess I'll go yay back. Simple. Okay. And so it looks kind of weird. In fact, this is when I usually make this black and then lighten up the background. But you get the idea. So now we can see the positive and negative reversals just jump out at us. And we can do the wave counts because we can see the bars to count. So you have a 0, 1, 2-period reversal. So a 2-period reversal right there on the weekly, on the 3-period RSI, blow your fucking mind, right? Divergence here. But if you sold here and you put a stop here, what the fuck happened? That's right. People say, I did. I took that signal. I sold right there. And then I put a stop here in case I'm wrong and give the market no fucking room. And what about selling the rooftops? Sell. Sure, you can sell one at the market. You can sell one here. But don't be a fucking idiot. I guess you put your sell stop here. If you consider this to be a longer-legged reversal. In other words, this is a triple. This is a double, sell. And it's just, that's amazing. I don't know if I want to go back looking at this and carry it forward because that's really breaking the rule of saying all that matters is this vacuum. Not even, so I don't know if you can get it, but see this little baby vacuum here? That doesn't matter anymore. No, in fact, from here all the way back, all that matters is that. So as it marches on, this did matter, but after that, it don't matter. It just doesn't matter anymore. Then you have this, you don't even see divergence in here, really. It's amazing. You'd have to go to the daily. Here's where, if you're on the daily, you're like, holy shit. Now here you got a lot of good RSI signals on the daily. Okay, here's technically speaking, index-wise, that is a divergence. Then you're looking for your first reversal. You take this high, and as soon as it starts to come above, you sell, sell, sell. Right? Or you have sell limits up there anyways, but typically you would have, and look, no fill on that. No fill on that. Okay, so it's got a nice reversal. So if you stretch this out, you can drill down on the index. I really should make these candles, these bars, different color. It's fucking driving me crazy. Fucking lime. Shit came with the platform. Green. It's gotta be better, right? It's color of money, right? Okay. So, we see the slight difference in price here. And this is quite a big deal, actually. Because that's only a 3-period reversal. So anything under 5 and under, 5 to 2, the most powerful trend continuation, or trend continuation entry, really. Because if it goes any longer leg than that, it's kind of a big macro wave or a big run, a big plow into uncharted water. So it's kind of like Where's Waldo, I suppose, in some degree. That's why you're probably going to go to the 4-hour chart, and then you end up on the 1-hour chart. And maybe you take the maybe you know how to trade the 1 hour chart. In other words, you're quick, you have tight stops. You don't have to give the market much room if you're only going to be in it for 3 hours. So you're really having to adjust, unfortunately, your life around the market. The market's giving you showing you the available volatility. And if your trading system is built on a 50 pip stop, there's some things you just can't do with a 50 pip stop, or even, a 100 pip stop. So if you're going to scalp large, which typically that's the idea, right? You're scalping really big. So if you have a big scalp going, you want to get out of half of that and get yourself out of the equity fluctuation zone if it's beyond your comfort zone. If you're fluctuating $1,000 every half hour, some people don't like that. Some people they don't care. They just they want to have a big fluctuation. Maybe they like the rush, the feeling of it. So depending on that, and then there's, oh my God, well, the 50-minute chart. Well, of course, each time you go down to each time frame, that's just more work. Like here's a 4-hour chart that didn't really. Now here's a long-legged reversal that I must say, you could claim it made you money. This is more overbought at a lower price, and you're like, look, I made this money to here. Look at me. Okay, well, or here's a reversal, more oversold. Okay, but this is your trade. You got to get the fuck out, because guess what? They're taking this out later on. So I don't even know. I wouldn't want. So what happens is people say, yeah, I like that RSI. Okay, maybe on the weekly, 1 hour here. Here's more oversold at a higher price. Do I get in? Okay, but look at what's really going on. Isn't the market just getting up near this top and then just crapping out? Isn't it just really making new lows that you would have been triggered on sell stops if you ran them? And the quieter it gets, the fatter the order comes in. What if you just put buy stops and sell stops on the 1 hour? Look, I'm long. I don't know anything about RSI. You don't have to. Like, I think if you're looking at the weekly, but you still got to realize that a weekly bar looks nice and smooth, and here's this candle, but there's a story on the 1 hour chart that looks like this. Which trade are you going to be in? Do you have a problem buying these new lows here and just making this and then just getting out into this vacuum, this jigsaw rooftop? Right? If this is the order block, zigzag order block jigsaw, the person that sells one here, one here, one here, one here is prepared to sell all the way to this top, and they're content to make money back to this, the breakout point. So this kind of matters because it's the most recent, but I ain't looking back to this and saying, I mean, I could say that to say, look at how it behaves there. But I could say the same thing about this level. I could say the same thing about just the grid that's on this fucking thing, this dumbass grid that MetaTrader randomly put up here. Well, look at that. It's good to buy down here. No shit. It would just be like, well, do I get in like a fucking maniac and put a stop here? Or do I put a buy limit here and just walk away and go, I don't fucking care. I'm putting a buy limit here. Like, so how much do you care? It determines how much money you're going to make. If you don't fucking care, then you'll make more money. So it's very counterintuitive. And it's I don't, you could talk yourself out of the trade real quick by saying, yeah, but God, it doesn't fit the moving averages. The 200 MA, and I'm supposed to break the 200 MA rule. I just said fuck it. It's like this. Oh, you just can't do. Well, you can do anything you fucking want. I mean, that is the point of trading. The only point is that, well, the market's kind of like only got so much opportunity for. There's times when it's moving and times when it's dead. So this is Asia right now. It's pretty dead. But and you could be holding something into the next session looking for the completion of that move. And if you're in it on the right side of it, it's going to probably distort your view of reality to some degree as far as what team you're cheering for. So if you're cheering for the bull team and here comes the bears, or the bulls are taking profit, however you want to view it, but there's tons of people in there. It's not just like smart money. I guess dumb money's losing money, but smart money's losing tons of money. Smart money's trading without stops, underwater, hedging. They're making it up somewhere else. Maybe they have a winning gold trade on their books. Aren't they doing just the worst trading in the world? Aren't these big institutions just the worst trader? Yeah, because they got some guy that's here, he's in this trade. Oh yeah, thank God Joe's over here fucking trading the goddamn crude oil. Otherwise, it's like we'd blow the whole fucking firm up. I mean, I think that's why they call it a hedge fund, because if it was called a super biased single direction fund, people would be scared shitless. Well, you better be right. We're all in the same. Everybody that's trade desk is in the same trade. Can you imagine? Well, why shouldn't they be? Why don't you get everybody why don't you get all these traders together in the middle of the day, before the market opens, and say, okay, guys, here's what we got on the radar. Which market should we everybody load into the same position? It'd be ridiculous. And what? So they can all, at the end of the day, go, "Wow, that was what the fuck were you thinking? What the fuck were we thinking?" I mean, it would just never work. So there's got to be some kind of, and this is how most businesses run, is that maybe they're just like a casino. They're just able to pull off 60% without, and people are jumping off buildings, and people are screwing somebody's wife at work or something, or some guy's got a disease, or some guys just shot the place up. I mean, they shot up that they shot up a journal, like a newsroom or something recently, and then guys went right back to work. They're like, yeah, whatever. But yeah, it's just what can you handle as far as waiting to get paid, I guess. And I guess if you are messing around with scalping, then you would realize, oh, this is like, this can really be profitable. It's also be just tons of work and focus, and it's tons of, just having to get up at that time of day, and just also saying, well, I guess if I'm not good at holding a position, then I'll be like, okay, I'm a scalper. And maybe you can't do that because you see the market moving after you just took a chunk out of it, and you're like, God, if I would have just stayed in on it. That's what this Forex hangout guy was talking about. Wish I could hold the trade. Well, you'd have to actually have separate accounts, I guess. You have to have two mindsets. But if you decided that you don't mind taking the cut in equity by just doing what, so I played with the band again Saturday night, and so here's the problem. The guitarist, he's he plays all the time. So the only time I can take a solo is when there's something wrong with his rig. He's having to adjust something. And I don't know. I don't blame him for wanting to play, but wow. Uh, so, it's, I don't know what to say. I mean, and then he says he's going to buy this X3 machine, which is like some insane, it's like a $2,000 rack mount effects unit where literally you play one note and the thing writes a symphony for you, which I don't know. I think that's kind of like going from heroin to mescaline. I don't think, I mean, just putting more effects on there, I don't know. Anyways, it's like moving averages. I suppose that's another thing is that when I play guitar, I pretty much just have a lot of gain and maybe a touch of verb. I try to do the chorus thing, but I feel like it's like putting it's like you decided on some kind of trading system. And I guess, when it comes down to it, however and maybe the people that run cloud trading have like spectacularly decorated rooms. In other words, I think there's something to be said for people's personality getting inside of the way you see the market. I think you would see it the way you see the world. So if you have to have like the 200 moving averages is like having, like GPS in your car or something. All the usual trappings, right? Everybody knows bankers, they drive to work with GPS, so I got to have that on my system. And I just wouldn't feel comfortable if I've asked people, and I'm sure I've offended people. So one guy asked, can you explain that 20 EMA to me? And this is the answer. Well, I use it as a guide because they could already tell that either they see my video, they could already tell I was going to pounce on them for, like, what are you doing with this 20 EMA? Oh, yeah, that. Well, that's what the institutions are using and all this stuff. It's hysterical. Anyways, this 4-hour gold chart. A 4 hour, and the thing is, the problem with RSI and the 4-hour chart is that, which broker are you on? And this is another problem with indicators. Whereas, what if all info you had was, was high, low, close? Forget the open, just high, low, close. So after the market closes and the new bar begins, are you going to, if the market's really quiet, which it is right now in gold, are you going to buy if it goes higher than it is now just for a simple dumbass trade that is so fucking dumb that if you were to tell somebody, look at the market every 4 hours, this is 6 times a day, you got to look at the market, and if the market's barely moved in the last, and by that I mean the highs and the lows are very close together, start putting confirmation orders in to just buy new highs. Now that goes against what I said before, is sell new highs. And this is the problem. It depends how many points or pips you're trying to make, and if you're going to sell new highs when the market's quiet, hopefully you're not selling the high that you're buying. So but you could have, okay, so imagine you've got 4 buys and 4 sells, and you are selling new highs, and you say, well, you know what? I'm gonna diffuse my risk over 4 different ladders, and I am gonna put insurance policy in there And maybe it's a wash, and maybe I lose on all of them, but okay, so I'm speaking theoretical. I'd have to show you the chart. So if you took a situation where your criteria was, your first criteria out of anything else is, do I have a relatively small bar compared to the last three bars? So actually, if you told the robot, the first time you see a bar that's smaller than the last two bars, put a buy stop and a sell stop. So that's your initial mechanical trade. So on the chart, it would look like, I just can't think of a dumber way to trade it. And whether those are new highs or new lows would kind of matter, I suppose. But if you're looking for, okay, this is a big bar, a little bit smaller, now the smallest bar. Okay, and then you put a buy stop and a sell stop. But if this is a really small bar, smaller than, well, slightly smaller, you're going to put 2 orders in. And if it gets really tiny, you're going to put 3 orders in. So this is what makes it a dynamic system that you have to do when the market says, oh, this is a really small one. Okay, we're going to put in 5 here and 5 here maybe. Now, this new low and this new low are different than this new low. So as further, the deeper you go back, this, I'm going to say it's an old high, but this would be the old high. This is a newer one. This is obviously where the sellers are coming in, all the way to here. So it is so hard to talk about the market because even in the simplicity of saying higher highs and higher lows, and like I said before, this is a higher low than this, but this is a higher low than this. So when people talk in terms of, oh, it's making higher highs, talking about a swing, and I'm at maximum zoom in on this right now. Max zoom in a MetaTrader. And still there's so much complexity here as far as just talking about, forget RSI. So let's just forget even the structure, the closing prices. It is hard to forget, and to strip everything off your chart and just go and say, can I play inside the range without any type of assistance from any type of, and it's I guess it's redundant data in a way. I wish I could get rid of the hash marks here, but I'm just going to take off the let's see, just get rid of all this shit. So it's taking up screen space. So I guess it's called naked trading. Is just a bar chart, and just a random price grid. I mean, this grid isn't connected to anything in terms of how many pips. And I probably should have a bigger bar on there, but that's as big as it gets right now, unfortunately. Okay, so here is our basic bar chart that we all come to know and love. And if we're just going to look for smallish bars, and I don't know, I don't have the cursor tool out, but I'm just going to say these are small bars. So I'm not going to even worry about whether it's a doji or not. To me, that's a little bit too much information. I would just tell people, and by the way, this thing was called Beginners, I think I went to his Beginners Trading course. Okay, just small bar. I could see you be trapped here on something. But like I said, if you have more than one order, you're going to put in clusters here, so you have sell, sell, sell. And somebody asked me about The guy that asked me how do you get the line, the 1 period moving average to show up on top of the bars. Okay, so here's the deal. How close do you put your buy and sell stop? So if this is going to be, if you thought that this market was at some point going to trip the sell, and that this vacuum or this uncharted area is going to mean something, right? If you go all the way back here. So I'm just going to omit this because the market can, in a market profile kind of world, you can only see, I think this is better than market profile. You can only see this, the uncharted water. And that's a big deal. And so from the top side view, if we just look current price back, oops, I want to kind of go around that. Look at this situation. And here's where the people that see this, actually I should just try to be equal opportunity view of this point. So this is the hole, and it just keeps churning up there. Of course, we have all these little beautiful where we crush into this and we get to scalp it back to here, hit it here, scalp it back to here. But there's all these mini VACs that are tradable too, the 4-hour chart. So this fills, right? And then all sorts of crazy trap there. So a lot of it, of course, this once that fills there, so it's like having a moving average that disappears, I suppose. Because once they fill this doesn't matter anymore because that's been filled. But that's a big deal. So at the same time, this is, and then crushed down. Now this is where people probably thought, man, this thing could just, and it could, but it wasn't enough. It finally took to here before we got that big crush down in, and then the buyers come in here where you're buying new lows. I guess you're buying old lows, but they're new to this. So see, this is the whole problem. The way you describe something, and it's something as simple and stupid as this, but here's a truth that we have a small bar, put a buy stop here and a sell stop here. From a breakout, non-directional mechanical trading standpoint, that is the only choice available. Smaller the bar, the bigger the order, so you can make this money, but then you'd have to stop and reverse and trade it that way. Then there's no trade. Then there's a trade maybe, and these would have to have, the bigger the bar, the wider your stops, and here you've been trapped. So you'd have to be taking profits here on all these, right, the stairway. You're cashing out, and then here you're having to come in big, and they would stop you out of something, but you have to have enough money to buy this area too. Because you can cash out into this floor here, and then it exceeds it. So I do believe that this price matters. When this hole fills, the fact that it's filling to here is the only kind of argument you can make for previous support on the closing price, and that's a true pivot. Going any further back than that, even though you could say it does line up, to me it's just it's unnecessary. It just doesn't matter. The market sees this right now, and this has been filled here, so this has already been the ultimate buy back into that, because that the most recent thing, that's all that matters. Like this mattered here, right? Because this was, you had to cash out here into the floor, because these are all floors, as it comes rocketing back up. And that mattered then because it made it back to that floor. But this floor back here does, you just can't make that. You could, and you could torture, fill up your brain with a bunch of, because I don't think the market sees this price anymore back here in terms of what matters to what, because if you do that, then you end up like this, and you're like, holy shit, well, look back here, like, and I just don't think I would bother with it, because it's like saying, well, look at this. If I mark this off, oh shit, look over here, it's this. Oh, that really makes it a big deal now. Oh, look at, because of this. Okay. Look at, well, it kind of found support there, it kind of found support. And it's ridiculous. All that matters now is this price and this price. And you are here. Are you going to buy it here in anticipation of it taking out that wick? Are you going to sell it here in anticipation of it probing that? That's the only decision. Sadly, that is the problem with trading. And right now you're going to pivot. So the line chart, once you get used to looking at the line chart, okay, we have a top become a bottom right there. You can make the argument that structurally in the clock, that is where you want to buy. And time-wise too. If this comes back to here, we can revisit this bottom and this is a double bottom. If we can retest that price, yes, this matters now. This top become a bottom. That does matter for the long-term people that are in this, or the people that sold that, hoping that they sold here and went up, and they're like, holy shit, dude, when it comes back, let's get the fuck out and go the other way. But I think what is more critical is the last known, and this is the last known. Okay, so this last known low, great place to buy. And once it blows through that, like the people that wanted to get on that train, they probably put in their, and they probably got filled. They got filled here later on. Now, when you look at the candlesticks, you can see just how the dojis just pop out at you. And if you got a trade plan for a doji, then you're halfway home, because you could just doji trade until you built up the account enough to put in some really fun limit orders where you're just going, you know what, I'm just putting a sell limit there. I'm just putting a sell limit here. No fill here or not until way out. And then you got your doji trades working. Right? It's pretty simple. And you just have to say, well, my broker's just, this is better than RSI, the dojis, in my opinion. Because here we've got two dojis. It's giving us the trade plan. The problem with RSI for me is I got to look down here and make a judgment. And then I'm going to say, well, look at this reversal. Okay, but am I putting limits in here like a smart money guy? Am I buying people's stops? And this is what most people would do, is the bulls have their stops in here trailing, or money management systems have them, and they have a stop comes right up into here. Trailing stops. I bought here on a breakout. Maybe I got stopped out here. At least I made this much money. You don't have to ride this whole thing from this doji all the way to this doji. You could have just got out everything here and then just put one more doji trade on, buy stop here. Now this, I am speaking of confirmation entry, but you could be a little bit more clever and trade both. Buy stop, sell stop, buy at the market, presupposing you think that's going up. Or you could sell at the market, sell at the market. it's how tight are you putting in the stops? How many times do you do that trade? Here you could say, well, I put the hedge on, and since it was a very small body, like a micro body, you're going to trade really big. Maybe you put 300K in here in one case, and you only trade that. Maybe this one. And so you're not even get involved in this trap where they trap both legs. You don't get involved in, well, here's not a bad trade. That was a good one. But let me see here. I guess you could consider that a trap. It really didn't make that much. It came back to, you're like, unless you cashed out of something there. This one made up for it. So how big is the body? How big is the wick? It's better to have a doji bot that takes the open to the close and puts on a market trade, and have a small range robot that comes in and puts on the goober confirmation buy stop sell stop trade. I think when it comes down to these spectacular deep state liquidity pools, if you're hand placing orders here based on the structure, holes in the structure, these windows, then you've got enough money getting in here on these goober trades, mechanically trading into the limits, even if you bought here on limits. But the deeper it goes, the closer together your orders are if they're the same size. And once you get beyond this, so if you go to the daily, keeping the scale fixed, so you lose perspective here. If gold ever comes down here, who's not buying it? So on that 4 hour, it was nothing more than coming back 5 days later and wicking into that. So buying right here. Most people aren't going to buy that because it doesn't, the RSI doesn't look right. The moving averages don't look right. I'm sure there's just no real reason to get in there, other than the fact it's just on the edge and it's backfilled this whole zone just like these. See, now no fill here. This is why you have to sell here and here. But the further back, like so sell limits here, further back the better. Once that cashed out, came all the way back. So this daily chart's a lot of risk. There's only there's very few dojis. So if you had a doji system, and how it ran on was the dailies, just not a lot of trades in here. And this is just a big mess here. Look at this. Look at the torture. The trend traders are getting tortured on this thing. So here's some nice, clean, still some torture here. Here you kind of make some money. Here's where you finally make some money. Big doji reversal. And now we're just treading water here. Look at this thing. Wow. How's this going to play out? So gold's been going sideways for quite some time. I think we're going to start cutting through that, or are we going to start to cut through this? So that's going to be a big, fun thing to watch. I don't trade gold, so it's just going to be fun to watch. Silver market sitting above the abyss. I marked all this shit off earlier. Same thing with yen versus Bitcoin. What we got here? Bitcoin looks like it's headed to hell. And a hand basket. Okay. What the fuck? And inside here, I duplicated a lot of these. Gee, I think it's over for crude oil. Is this the failure swing? Oof. What else going to happen to that? Oh, cats going down. Supposed to raise interest rates next week. I don't know where I put my yen. Just put too many symbols in here. Okay, so this thing's almost cashed out. Now I can start putting my sell limits in here. So I'm going to put the navigator up here, throw some sell limits in. Then we'll go crash out. Get some food. So my sell limits. Don't have a lot of them. I'm going to come above the round number. It lasts all day. 10 pip grid there. It's like a 25 pip stop to make 50 here. So 50 to make 100. I'm going to put those way up on the top. You got $5. It's a 2K on the 25 pip stop, and it's seasonal $5 risk drops. I go consult the daily chart. That looks good to me. We're going to sell above this. That's just how it is. As long as we don't repeat the input, the starting price, and we don't want to duplicate the exit either. So the it's complete straight risk here, $5, all the way to 114. So I'm just going to let it cash out. I should move these up though. See, this is where I'm going to break the system. I'm going to move up my take profits to where I'm going to sell into and go the other way. Take them above the highs from July. Okay. I'll put a couple that exit on the way there, because we know there'll be resistance on the way to the edge. This is another painful aspect of trading, is the work of moving these tickets. Well, there you go. I got the RSI on there, as if it matters. Doesn't really show up too good here. See, it's just too hard to fight your mind to see it. But so here's your buy entry on the RSI. More oversold, higher price. But see the wicks. This is where you have your orders in a 10 pip window and buy limits. So buy, even though it is a reversal, it's still about buying this sweet spot here where they take out, and coming into just before London, they're going to take out this intraday low, and you're going to gobble that up, or you're going to put buy stops in, or you're going to wait. And this is where it comes down to work. Are you going to babysit this 4-hour chart and put your buy stops here? And what's it really going to look like? How are you going to really do this? Are you going to put the buy limits in here so you can go sleep and not worry about it? Or are you going to wait for confirmation entry? Here's why it's better to have a robot put the sell stops and buy stops in. If you're going to do that, buy stop, sell stop, robot gets in. Does the robot know when to get out? I don't think a robot's going to be able to buy this, like these new lows, sell into this. I don't think so. Yeah, you want your robot to throw limits in there, but I don't know. Anyways, that's it. Good luck with all that stuff. We're on to the turn on the stove here and get some food.